In 2003, we went to the government of Rajasthan and we said to them that all your roads go east-west. So if you go into Rajasthan and you see the socio-developmental possibilities of Rajasthan, the road network didn't support it. It didn't support agriculture, it didn't support industry, it didn't support tourism, it didn't support services. We went to the government of Rajasthan and said that at our own initiative, why don't we establish 1,052 kilometers of state highways, north-south, in Rajasthan, so you form a grid. And these are the benefits from it. One big catch, those roads didn't exist. So there's no way we could, or the government for that matter, could do more than an educated guess on what was called diverted traffic. And this is the heart of the design challenge which eventually comes to the bank's table. At that point in time, 2003, Government of Rajasthan had PWD department that did its own capacity for roads. It had a corporate structure, 100% owned by government, called RSRDC, which was also mandated to do roads. And here's ILFS going to Government of Rajasthan saying, let's do a 50-50 joint venture for this 1,052 kilometers of roads. Rightly so, the bureaucracy said, why should we do a joint venture with ILFS? We have our own 100% corporate. And we gave the counter argument, we don't need Government of Rajasthan guarantees. That was a very powerful incentive for government. Finally, we incorporated this company. 1,052 kilometers of roads in 2003 was costed at approximately 1,600 crores. On a 30-70 debt equity ratio, very straightforward. We needed approximately 400-500 crores of equity, the balance 1,100 is debt. But keep in mind, we were talking diverted traffic. We did not have any basis of which we could forecast traffic on these roads. 15 banks placed faith on this mechanism and raised 1,100 crores, led by Punjab National Bank. Project was completed in 22 months, from start to finish. Across Rajasthan, 7 packages. We are in year 2014, something like about 9 years of operations. Initial traffic was much lower than forecast. It is now caught up. The government is now going to implement another 1,500 kilometers. They have a balance sheet which is viable, and now they have a traction on the basis of which they can say that the next tranche of roads are going to have the capacity to service debt in this particular manner. The lesson from this is that we cannot take away from viability of projects government involvement in the design and implementation of projects. The biggest disservice to this country has been that government has seen PPPs as a way to deleverage budgetary support. In actual fact, it's exactly the opposite. We need to optimize budgetary allocations using resources of the private sector to ensure that we build project structures which are bankable. And this has to be constructed. This was not going to happen because naturally going to happen. The second example I want to give you in this is how we have secured concessionaires in the road sector. In 2003, when all this was happening, the government, Ministry of Finance said, let's go to viability gap funding. But see what they did. I was on a committee that decided on the viability gap funding, and it was a huge issue. And what was the issue? There was no question that a viability gap scheme was a very good scheme to make a project bankable. The question is the way we approach the bidding of it. So I kept shouting on the rooftop that the only sponsor that we should have in concessioning of road projects, whether public or private, should be somebody who's invested in the project for 30 years. Not somebody with a 3-year perspective, the contractor community. In actual fact, the bidding parameters are so made that they allowed contractors to bid a premium on the concession in order to win a construction contract. So as long as growth rate of GDP is 8%, it worked brilliantly. And as long as Mr. Nair and SBI at that time allowed sanctions to take place for those projects, it worked even better. But the day he went to IFCL and growth rates came to sub 4-5%, that story was over. And that construction industry today is in great pain. But look at what we have done. Not just that they're in pain, but if today the government of India wants to implement the $100 billion of road concessions that they have earmarked, they will not get sponsors from the construction industry because they're all dead. That is the tragedy. We have enabled the sector to implement projects. So, if you want to come back to bankability, it has to be on the basis of a constructed viability where the government, the regulator, the banker and the sponsor are on the same table, talking the same language with one purpose, to make that project work. I want to end with a very interesting example that was given in UK. In fact, when she came and met me, I told her that if we really want to spend $1 trillion in infrastructure in the next 5 years, you line up every single contractor from L&T to the smallest of this country and tell them, implement this over the next 5 years. At best, at the very best, they can get to $200 billion in the next 5 years. All contractors put together will not exceed $200 billion, and I can prove it to you based on the actual numbers that we have seen in the last 5 years. It's no record, this is in government records in the plan document itself. So why would you want to bid projects? I asked the government this, why do you want to bid this project? Why doesn't PW tell me, I'm willing to give you 1.5 crores per kilometer for this stretch. You have some capacity, come and build it. Give everybody the contracts they require, they'll be happy, the economy is benefiting, you'll get infrastructure, you'll get your money back, sir, as a banker. But there's the issue of transparency.
Vigilance.
The issue of vigilance. But can you imagine, we have got today an official number of US $1 trillion without the capacity to implement domestically, and we can't even get the construction capacity to do it. And there's a very simple reason for this. We're not letting them build capacity. So here's what UK did. In 2001, UK wanted to improve Heathrow Airport. So they went through a tender process. They chose a contractor. When the contractor was about to end his contract and construction period, the government went to him and said, you've already mobilized your resources. You're sponsoring this part of it through a concession. Why don't I give you another airport to build for me in a different location at 5% lower than your bid price on this one? After all, you've learned what to do, how to do. Give me the 5% benefit, you keep the contract with you. When he completed the second project, they asked him, how do we both export your capability to the world? That company today is the largest construction company in airports in the world, located out of UK. Why can't we pick up the top 15 construction companies in this country and tell them, as a country, we'll back you to become world beaters, the Bechtels of tomorrow. And we'll begin with projects at home, which our guys will assess as a reasonable price through a tender process, no problem. And then you build up this capacity. If you do this, bankers will have no problem financing. Bankers love cash flows. Show them the cash flows, they'll finance it for you. My last example is our wind assets. We didn't invest a single rupee, we didn't lend a single rupee in the wind sector till 2009. The framework was not in place from our point of view to support sensible lending. We syndicated a lot, of course. We had some fees in that process. But in 2009, we began to implement wind assets. We are today 675 megawatts of wind assets across 7 states, doing extremely well. We financed it domestically from the domestic institutions. I think those banks are happy. We've been servicing them, no problem. We are now, on the back of 675, going to the Singapore Business Trust route. Mr. Maharaj, a very interesting route in Singapore, where we can actually refinance our entire project that we have invested in India, repay the local banks, get international money into the sector, and give enough extra money for us, because those investors are asking for lower yields because the risks are much lower. That premium that we're getting, we're reinvesting back in the wind assets, and we should be at about 2,400 megawatts in the next 3 years. That cycle of investment and return needs different levels of players who have different risk-reward appetites and structures. And we don't have that in the country today.